Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. It is inevitable that there is going to be a recession in 2023, at least according to most Wall Street executives and economists. And last I checked, it's mid-May, and we are almost halfway through the year, and ain't no recession, which is a good thing, because I don't want one either. But there's no rule anywhere, there's no textbook anywhere that absolutely says that we have to run into a recession in 2023. In fact, even if we do, that doesn't mean that the stock market is going to fall. We already talked about 8 of the last 12 recessions. The stock market was actually up, including 2020, the last recession that we went through. So in this video, we need to talk about what a recession is, what could cause it, and why I feel like we might not run into one before the end of the year, which I'm sure we are all rooting for. So first, let's break down what a recession is. Remember, a recession is when you have, or at least a textbook definition of a recession, is when you have 2 negative quarters of GDP growth, meaning gross domestic product. That's the value of the stuff that we produce. So if I make a computer at a factory and it's worth $100, every single computer that everybody produces is added up, and that goes into GDP. And that includes everything that you produce, that we produce as a country. You add it up, that's GDP. Now in 2022, last year, we did have 2 negative quarters of GDP in a row. They have to be consecutive. Now there is the Bureau of Economic Research, that is the government entity that comes out and says, yes, we are in a recession, no, we are not in a recession. Last year, they didn't say anything about it. And the reason why they didn't is because they are the ones who officially say this, they're the ones who look at other factors, including unemployment. Unemployment was fine. Consumption, the stuff that we buy, the demand that we are going out and generating when we're buying stuff, it was fine. So they said, hey, we're not in a recession, at least at that point in time. And right now, we're in a very similar situation in that unemployment is at a historic low at 3.5%. People are still buying stuff. And outside of a lot of the tech space and some of the banking issues, the job market is okay. Now, it has slowed down, but right now it is okay. Last quarter, first quarter of 2023, GDP was up 1.1%. It is expected, so there's an estimate here, that GDP is going to grow by around 2.6%. So what gives? Like, what recession is everybody seeing? Now, we feel like it because inflation is high, but even that has fallen from 9.1 to right around 6%. Now, that's not where we want it to be. That's not where anybody wants it to be, but that has fallen. So here are the 2 things I would be concerned about. I think you already know what I'm going to say. Debt ceiling, that needs to be cleared up before June 1st. Okay, because if that don't happen, we're absolutely going to be in a recession and a whole bunch of other pain if that's the case. So hopefully, and I think it will, just political game of chicken that people just, whatever. That's why we don't cover politics, it's annoying. Okay, so that's one, but it actually does need to get passed. So that's one thing that could push into a recession. And the obvious one is, will the Fed continue to raise rates to a point that the economy starts to fall apart? Even the Fed themselves said that making this quote-unquote soft landing could be difficult, and they even estimated that unemployment could tick up just a bit. Hopefully that is not the case, but even if unemployment goes from a historic low to 3.5 and goes up a little bit, which again we don't want, it doesn't have to put you into a recession either. So what gives? Remember that anytime you run into a recession, it is usually some mechanism, something happens where you have an imbalance between supply and demand. In 2020, we had an imbalance between supply and demand because of the pandemic. What happened, right? So we had a pandemic, stuff was wild at the time, and you couldn't have people going into work, going to a restaurant, people couldn't travel, and that's where you had that supply and demand. Demand fell off. There was no demand, and you had all this stuff out here that couldn't be bought because people couldn't go to work. Right? So you had the imbalance in supply and demand, economy fell off a cliff, right? Even in 2008, now this one's a little more complex, but if you don't know what happened in 2008, you want to know what happened in the Great Recession, did an entire video on that, feel free to search the library for it. But basically, we had a mismatch between supply and demand again. And people, we had a supply of houses and we didn't have the demand for people to afford those houses anymore. And to make things worse, really, we had investments called mortgage-backed securities based on those homes and those mortgages. So when people couldn't buy those homes, those investments based on those homes fell apart, and everybody was investing in those investments like Bear Stearns and AIG and other pension funds, and that is how everything started to fall apart. Mismatch between supply and demand. Well, right now, demand is okay. People still buying stuff, right? Inflation is still high, and that is one big issue. It is around 6%, which is 3 times higher than what it should be. And we know the Fed is focused on bringing that down by raising interest rates. The further they do that, the closer we get to that risk, and the closer we get to another bank failing, which is something that everybody wants to avoid. But let's say, and the Fed has hinted this, they could do a pause. They can relax just for a little bit and see what happens to inflation. If they pause, and that's not to say they're going to pause for the rest of the year, but if they did, and we get past this debt ceiling thing, who says that we absolutely have to have a recession this year? And you only got 7 months to pull it off, which obviously we do not want to do, but that timeline is really shrinking. And let's say, hopefully we get out of 2023 and no recession occurs. You're just going to kick it down to 2024, 25, and you're just going to keep guessing every single year? That could be the case. That could be the case. But here's the thing. It don't have to happen. Okay? It does not have to happen. And I think we're all rooting for it not to happen. But just because it is in the news every day and there is the threat every day doesn't guarantee that it has to happen. We talked about this before. Goldman Sachs says that they think it's only a 35% chance. And I'm starting to lean that way. And they did say, and we've talked about this before, that they say they think it's 35%, but Goldman Sachs says everybody else says it's 65%. So that range is relatively high. But looking at it, I mean, anytime there's a recession, with the exception of the coronavirus pandemic, that's the only one that happened instantly, like overnight, within 3 weeks. Things happened. I was sitting at home, we were watching on the news, hearing about stuff, and then the first thing I noticed when I got really scared was when they canceled NBA games. I'm like, oh my God, this is a real thing. And then weeks later, everything fell apart, right? Within 60 days, the stock market had lost so much money. Like, it was just a ridiculous dip. Like, it felt like overnight. Well, that's unlikely to happen in the next 7 months. And I pray to God we don't have another pandemic for the rest of my life. But y'all get the point here. Even in 2007, 2008, even the dot-com bust, like it was a relatively slow, like, hey, things aren't going well, and it kind of tipped over time. And it, 7 months is very difficult for all those things to just coalesce and happen instantly, provided that it's not a recession, provided that there's not a war, which none of us want, and provided that the debt ceiling and all that kind of stuff is taken care of. So that's the thing. I don't think it's inevitable. Is that how you say it? Right? I don't think it has to happen in 2023, and we might be okay. Now, just because of that, does not guarantee that the stock market is going to be up or down. 8 of the last 12 recessions, the stock market has been up. So there's that, right? That's not a guarantee of where the market is going to go. That is an even more difficult thing to try and gauge. Also doesn't mean that more banks won't fail. Those things can still happen, but so far they have not contaminated the entire economy. So we'll see where everything goes. I don't have a prediction, but I would not be surprised in any direction. But we already in May. We have made it this far. We might as well just finish the rest of the year without nothing crazy happening. Okay, that's what I'm looking for. All right, that is it for me today. Later this week, I guess the end of the week, but over the weekend, I'm going to drop my top 10 most undervalued stocks. I did a video of 5, and I told y'all I held one back, and that one's going inside the members only. So you need to sign up right now for members only. It's only $2 a month. We do deep dive, detailed breakdowns on the stock market, and I answer questions that you guys are looking for, and I give out resources there as well. So I'm looking forward to dropping that video over the weekend. The only way you can get it, hit this link here or go down in the description below. All right, that is it for me. I will talk to y'all later.